Good evening, everybody. Let's go ahead and get started. I want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just let me know that it is indeed working. It was great to see a lot of you guys in the prop firm webinar that we just had a few moments ago. Thanks for coming to that. For those that came, that was great. I'm sure you learned a few things about funding traders and maybe a few different things about the prop firm industry, whether or not it's a good fit for you. So I'm excited. Tonight we're going to be discussing a divergent COT data. So I'm really excited because there's a lot of divergent signals right now. And so I want to help you guys prepare for those trades as they come in. The thing about the divergent signals is they do take about anywhere between 1 and 3 weeks to play out. Some of them have taken up upwards of a whole month to play out. So they're true swing trades, and they do last a while. So one of the nice things about signals like that is you don't have to do a lot of legwork as far as being at the computer present at a certain time. You don't have to get up at a certain hour to trade. It's something that you can casually anticipate over time, although it does require your attention several times a week to make sure that you're present and ready to go for when that trade does take off. I'm going to show you tonight some examples of some trades that took off recently from the divergent scanner that we took. And then I'm going to show you, obviously, the signals that we have right now that are gearing up for potential big time trade opportunities. So I'm really excited to share that with you guys tonight. I want to show you how to identify what a divergent trade looks like, and then obviously how to get into a divergent trade. Okay, so that's going to be the game plan. And if as we go along, feel free to hit me with your questions. But let's jump right into it. As always, I need to remind everyone about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your contract size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and jump into this. So let's go straight to the divergent scanner. I want to show you guys how to look at this. So I know a lot of you guys might be watching this on YouTube right now, and you might be tempted to click away. Let me change your life real quick. So hang on. Let me show you how this will just absolutely change the way you look at the markets. Okay. So one thing that we can establish right out front that I think is that most people can understand and agree with is that the banks are very good at trading. All right. That's number one. Um, we also can establish that retail traders, also known as dumb money, are not very good at trading. That's your general, just people like you and me. Not saying that I'm not a good trader. I consider myself as an excellent trader, but it took me time to get to get to this point, right? And it also some of you are excellent, fabulous traders, and it took you time, and others are aspiring to get to that point, and you will get there. But as retail traders, we come with a lot of baggage. We tend to want to buy the markets when they appear to be at bargains. We want to sell the market when it appears to be at a top. And we get it wrong all the time, like using just traditional tools and indicators. People are losing money using those traditional tools. So you need a different way to look at the markets. And I believe that this is the solution to that. So back to what I said earlier, the banks are really good at trading, right? And since they're really good at trading, they know which direction the market's going to go for the most part. And I don't know if it's that they know, it's that they create the direction. They're the ones that decide which way the market's going to go. One of the best ways I know how to predict the market is by using COT report data. For those that don't know what COT report data is, it stands for Commitment of Traders. It's this report over here. You can get it from the CFTC, cftc.gov website. If you go up to their ribbon up here and click on Commitment of Traders under Market Data, you can find it right here. And it shows you, these are actually all the different COT reports. This one from the Chicago Mercantile Exchange, the short format version, is the most common one. And this is basically it right here. These are the euro futures on the Chicago Mercantile Exchange over this last week. And so it tells you what the banks, like I said, how many long positions they have, how many short positions they have, the change from the previous week. So right here on the euro, you can see that the banks have increased their positions on euro long positions. They've also increased, ironically, they've increased their positions on the short side too. So their total open interest has increased. But long story short, they are uh, they've increased their amount of long positions more than they've increased in their shorts, right? And this tells you in number of contracts that they're long. So right here with the euro, they're 220,000 contracts long and 119,000 contracts short. So they absolutely have more bias to the long side than they do to the short side. So this is a very important information. Obviously, we'd like to know which direction the banks think the euro is going to go. And if you just look at this from a longer term perspective, like when I look at these two numbers, yeah, obviously we have almost double the amount of long positions from the banks as we do short positions. So, yeah, I mean, over the course of like, say, 6 months or a year or even a couple of years, based off of what we're seeing here, I would imagine that the euro is going to go up in value. And it has been actually. If you look at it over the last, like, say, 6 months, the euro is much higher today than it was 6 months ago, right? And this could be attributed to the bank buying. The euro doesn't go up if I buy the euro. It doesn't go up if you buy it. It goes up if the banks buy it, right? And the way they buy it is they buy it from each other. They also buy it from people like you and me, and they get people like you and me to go short. Because if you think about it, that's what a market is, right? What's a market? A market is where there's willing participants to go in the opposite direction. Let's say you were to walk into a store. Have you ever gone into like like 20 years ago, you go into the GameStop store and you want to sell one of your old video games or something like that. Or you go buy an old video game. I used to do that growing up. I'd sell my video games. It always was crazy to me that they wouldn't buy it for more, but they were always just flipping video games, right? And so I'd go in there and try to sell Super Smash Bros on Nintendo or something, and they'd be like, "Yeah, we'll give you $3 for it or something," and you're like, "Oh, I'm only $3 credit. That's it." Anyway, so um, in order for a market to happen, there has to be somebody who's willing to sell something, but there also has to be somebody who's willing to buy something, right? And that's what a market is. And so um, when I go out there and let's say I sell the euro, there's banks out there who are willing and ready to buy that take the other side of the trade. They're like, "Oh, you're willing to sell it? Perfect, great, because we want to buy it." And so that's what creates a market, is having willing participants both directions. Generally speaking, the banks are better, like I said, than we are. Can the banks get it wrong? Yeah, they can get it wrong. However, the way I've seen the banks get it wrong when they trade COT data, I've seen the banks usually be wrong for a couple of weeks type of thing, and then they get it right. Like they don't lose for very long from what I've seen with the COT data. Like I can see them maybe lose this week and the week after, maybe the week after that, but typically within 3 to 4 weeks, they are moving in the right direction. Or even just the same week they take a position, they're already profitable. But certainly within 3 or 4 weeks, they're profitable on the trade that they were hoping to take. Nothing's surefire. Nothing's 100%. That's why we have to use a stop loss. That's why we can't just go out there and bet the farm on trades. But if I were like, if I had to pick the direction of the market over the next several weeks, I would immediately refer myself to COT data. I don't know anything that's more consistent about predicting the market over the next several weeks unless it is COT report data. Unless somebody can show me something better, I'm going to continue to be using COT report data. Now, specifically, the way we're using the COT report data on the Divergence scanner, to me, is the most elite level of using COT report data up to this point. So for those that don't know this, the Divergence scanner was built back in August of last year. So it's about 10 months old. And we've had quite a few trading opportunities since then. And we've had a lot of really big successes. Some of the biggest trades we've taken have come straight from this scanner. But it's also been a learning experience, because over the 10 months that we've been using this little scanner, it's been quietly calling out fantastic trades. But it's a learning experience because I've been learning how to use it myself over the course of 10 months, but we're getting better and better and better. And so with the consistency that I've seen, I plan to integrate this scanner more and more and more as the future goes on. So let me explain what this thing does and why it's so genius. And by the way, we're the only ones that I'm aware of that uses COT data this way. So I even hesitate to share this on YouTube because we really do have a corner on this that like no one else has put together. It's really, really cool. I actually did have, I think I mentioned this last week. I had a couple of hedge funds, two of them reach out to me and actually came across some of our videos on YouTube and said, "Hey, we would like to figure out, can you tell us more what you're doing with the Divergence scanner, because we've been trying to do something similar, and like it's, here I am, and I put it, I'm just me. I'm literally just Steve, and I put it together." So okay, cool. So let me show you how this thing works and why it's so genius. So it looks at two variables and two variables only, and it keeps it really, really simple. So what it does is it looks at the change in price over the last 3 weeks. That's an easy variable to monitor. So I just have a place where I go shopping for data that pings onto my spreadsheet every second of every day, and it just tells us the change in price over the last 3 weeks. That's all it does. Okay. Then on the next column right here, we have the shift. This is a percentage. So it's the percent shift in COT report data. So what this means is it's telling us what the banks have been buying and selling over the course of 3 weeks, expressed as a percentage. Okay. So for example, if I filter this by positive shift, I've got a really big shift right now on the New Zealand dollar. It's a 91.03% shift. What does that mean? It means that the banks have increased their positions on the New Zealand yen to the tune of 91%. Okay, so that's a combination of acquisition of long positions and also just the subsequent selling of their shorts. Okay, so overall, the net change is a 91% shift to the long side, whether that be just selling off short positions and closing those out, and or a combination of buying. Usually, it's a combination. So in order to have a 91% shift, that's usually means you got two things working in your favor at the same time. You've got banks who are getting rid of their NZD yen shorts, but at the same time, and just as aggressively, if not more aggressively, they're also increasing their positions on NJ. So that's huge right there. The next column, what this does is this is proprietary right here. I've put this together. This is a ranking system. It creates these high numbers and very negative numbers based off of these two variables right here. We're monitoring how far the market has moved and subsequently how far the market's reacted to the subsequent buying that's gone on. So for example, with NJ right now, we've got a plus 2.52% change. That's a net shift of 2.52%, not shift, excuse me, that's a change in price. So New Zealand yen is up 2.5% over the last 3 weeks. In that same period of time, these banks have increased their positions by 91%, which is a huge increase. So what we're trying to say here with this pretty big positive number is that we're likely to see an even bigger move to the upside over the next 1 to 3 weeks on the New Zealand dollar or New Zealand yen, because of how much buying the banks have done and because of the fact that the market hasn't responded to that subsequent buying. Let me show you another example of this. If I filter this the other way.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
This is actually a really good one right here. I'm going to use this. Actually, let's use this Euro Kiwi. Let's do this one. So this one has a minus 53% ranking right here, or minus 53 ranking. And I'll explain more what the ranking system, how that works in just a second. But if you look at this, there's a minus 69.5% negative shift by the banks over the last 3 weeks. Meanwhile, in that same period of time, the banks have increased their positions on the Euro Kiwi. No, oh, excuse me, they haven't increased their positions. The market's gone up 1.75%. So the market's up almost 2% in 3 weeks. Meanwhile, the banks have been selling nearly 70% of their positions. They've been shorting this by the tune of 70%. So that's a divergence. Why is that a divergence? Well, because the market has gone the opposite direction of what the banks are trying to do. Banks are trying to sell Euro Kiwi, and yet this market has actually gone up against the banks. And so, in order for this ranking to come down and get closer to zero, which would be an efficient market, what would be required is you would need the Euro Kiwi to go down in price for this number to stabilize. So basically, if you have a number that's close to zero, in fact, I've got one right here. This USD franc is exactly ranked at zero. See the ranking there? Zero. And its price divergent ranking is ranked zero, and it's also a neutral signal. Why is that? Why is the USD franc ranked zero? What this means is that this is a perfectly efficient market when it's ranked zero. And the reason for that is because the market is down 2.52% in the last 3 weeks. Meanwhile, the banks have sold 15.17% of their positions on the USD franc. That's about an expected move based off of the quantity of selling that the banks have produced or procured during that same period of time. So this would be an efficient market. There's no signal on that. I can't use this currency pair because I have no divergence. That's a perfectly efficient currency pair. All right. You've got other ones that are pretty close. Like this one's a positive one. That's a neutral signal. I wouldn't worry about that. That's the Euro Aussie. It's up 2.22% in the last 3 weeks. Meanwhile, the banks have increased their positions by 14%. That's very, very neutral. And so the time when this becomes a signal is when you get closer to like the mid teens. Like right here, I got the CAD franc. It's currently sitting at a buy. I've got these up here that are all sitting at strong buy. If I go down below, I've got a couple that say that there are sell signals. And then I've got all of these that are saying strong sell right now. Okay. Typically, you're actually only going to have probably 2 to 5 signals on here that say strong buy or strong sell out of 28 currency pairs and 5 CFDs. But right now, I've got like 10 different trade opportunities, maybe a dozen different trade opportunities. So it is actually pretty rare right now to have so many trade alerts on the Divergent scanner. The other thing that you're going to notice on the Divergent scanner is that a lot of these are very correlated signals. For example, if you look at this, filter this negatively, I've got like Aussie Kiwi, minus 54 ranking, strong sell signal. You look at the Euro Kiwi, it's a minus 53 ranking, strong sell. So both of those say strong sell, even though, I mean, they're different currency pairs, but it's the Kiwi that unites those. And because of the Kiwi change in price, or change in COT data, that's causing this to look the way that it is right now. So you're going to get a lot of very correlated trading opportunities. So just because you've got like 12 different trading opportunities doesn't mean that you should take all 12 of them. In fact, the way I would approach it is I would probably look at maybe taking like, honestly, I'd probably just focus on one or two of them at a time. I'm going to show you tonight which ones I'm going to be focused on in just a moment. Any questions on the divergent scanner, how it works? Just in recap, while you guys put your questions in there, if you have questions or comments, the goal of this scanner is to help you make money. But how are we going to help you make money with this scanner specifically? It's going to help you make money because this is going to let you know in advance which currency pairs the banks are actually losing money on. Okay. The reason why that's significant is because um, if the banks are losing money on a currency pair that they really want to go up or really want to go down, that actually means that you can buy or sell that currency pair at an even better price than the banks are buying and selling at. So if you've ever felt like the banks are watching you trade, have you ever felt like they're going after your stop loss and they're stopping you out just right when you thought it was going to turn the direction you thought it was going to go? Now you get to do the same thing, but to them. So that's really, so that's to me, that's really exciting because obviously, if you think about all the money they've taken from you or from other traders, you get to take it back to them. So Mohammed says, "Heck yeah, exactly, exactly." So that's what this tool is designed to do. It's designed. I wouldn't say like is well, yeah, it is. It's for you to basically find where the banks are vulnerable and attack the currency pairs that they're vulnerable on. That's why I say this scanner is so fun and so exciting to me because when I see opportunities on here, you can basically exploit those opportunities in advance. Now, as a reminder, how long do these trades play out? How long does it take to take trades on here? This is a true swing trading scanner. We had a trading opportunity. If you guys recall, I'm going to show it to you guys. I'm going to show you a Telegram. On Telegram, I posted, this was to the bigger group. This is the free group, actually. Let me go back to the beginning of June. Let me scroll back up. I posted, yeah, right here. So this was on June 9th. On June 9th, I told the big group and the paid group, both groups, I was saying, hey, we've got a strong buy signal on the USD CAD. It was the best alert we had at the time. The market was going down over the last 3 weeks, and the banks were purchasing USD CAD. At the time, the USD CAD was just sitting right here, and the market actually kept going down. Like the USD CAD actually continued down for about another 4 or 5 days before it actually came back up. So this was where the market was on June 9th. Let's actually go look at the charts. So that's when I got the original signal to buy the USD CAD. So as far as timing goes, I wouldn't say that this is something where it's like impeccable timing. Sometimes it can, but I'm just letting you know right now that you can get into a trade on the Divergent scanner and it can go against you for a whole week before things get better. That's exactly what happened right here on the USD CAD. Let me show you this. When you pull this up over the course of that period of time that I was telling you, here, let me delete all this stuff. So let's go back. Let's go to an hourly time frame. Let me go ahead and zoom in on this. And I'm going to show you this right here. Okay, so this is it right here. So June 9th is when I was telling everybody time to buy. Okay, look at this guy. This is Monday, June 9th, right over here. Okay, Monday, June 9th. Okay. The banks had been buying this, keep in mind, for the last 3 weeks. So they were buying like back over here. They were buying maybe even over here, probably more buying back over here. So they were buying here, they were buying here, and they were buying here. and it's been like 3 weeks of buying pressure. Guess what happened for one more week? This actually, a week later, hit another low exactly a week later on Monday, the 16th of June. So the USD CAD actually kept on dropping and found a liquidity zone that it liked down here before it went up. Now, exactly a week later after that, on Monday, June 23rd, we hit a high. So this is when I told everybody the based off of what the banks are doing, the USD CAD is a strong buy. Like there's a huge buy around the corner. Now, for a week after that, this actually kept going down. And then a week after that is when this thing shot up to tremendous highs. This move from its lowest low on June 16th to its highest high on Monday, June 23rd was 250 pips. That was a 250 pip move in 5 days. Okay. They're not, some of them are more pretty than this. This is actually a more ugly opportunity, and I actually wanted to show you the more ugly opportunity from the Divergence scanner because it can get ugly like this. Did this still work? Absolutely. But it actually went against us for a whole week before that got better. Okay. This is an uglier one, but it obviously went higher. So this is when everyone was saying buy. And if you had bought right here and held until there, you're still looking pretty good. But if you can scale into this, not on the way down, but as it starts to come back up, if you start buying into it on the way up, this is where you can make a lot of your money on the other end of this. Okay. Okay. Let me show you one more example. So this is an uglier one. I'm going to show you one that's a lot more typical. Okay. And it can be kind of ugly too. We were about, do you guys remember gold? Um, when I say, do you remember gold? Like, when did gold hit an all-time high? Gold hit an all-time high on April 22nd of this year. On April 22nd, gold got up to almost $3,500 an ounce. It was an all-time record. Okay. If you look at the Telegram channel here and you go back to, I think, April, let's go back. April, let's keep going. Let's see, I'll find it right here. Is this it? Yep, here it is. So on April 16th, Divergent scanner. Here it is. Banks selling 24% of their positions over the course of 3 weeks. Meanwhile, gold is up 11% in 3 weeks. Absurd move, not sustainable. Okay, not sustainable. And meanwhile, the banks are fading it, which, if you don't know what that means, it means that the banks are selling into the move. They believe that the market is overpriced and that they're fading it. And we have evidence of them fading it because of the selling that we have right here. It had a negative 29 ranking, which was actually pretty high at the time. We've actually got some that are even higher than that right now, but that was extremely, that's a very negative ranking. Okay. Obviously that's going to equate to a strong sell because you've got price going up and you got the banks going the other way. That's a divergence. That's why we get a divergence ranking that's pretty negative. What did we say? Gold is a strong sell on the price divergence scanner. That means banks are losing money on the sell position they acquired over the last 3 weeks. This also means we likely will see a pretty large drop to the downside in the next, how many days? 1 to 14 days. It will be visible on the hourly time frame. Did that happen? Well, if you come back over here, when was April 16th? I think it was like, yeah, right here. There you go. Yeah, April 16th. There you go. That was April 20. That was April 16th. That's when we said gold was imminently going to collapse. Like that we're days away from a collapse on gold. How many days away though, based off of what I was saying right here? 1 to 14 days. Okay, so that means if I posted this on the 16th, Wednesday, the 16th of April, that means we must see a collapse on gold within 14 days, which would take you to, that would be Wednesday, the 30th of April. Okay, so we have to see some kind of collapse between here and here. Did we see a collapse? Yeah, we did. The collapse happened. But here's what happened first, though. For 5 more days, gold just did a juggernaut rally. For 4 or 5 days until April 22nd, it just kept going up and up and up and up. And then gold never came back. All right. It's actually never been back there. It's been close. But if you look at this, gold has actually never gotten back to the April 22nd high. And our scanner was telling you to sell gold back on the 16th of April. And it got to that high on April 22nd. And it's actually never been back up to that high again, which is pretty remarkable, I think. Okay, so this can get, like I said, it can get ugly if you trade it a certain way. If you just, like, let's say you sell right there and you just keep selling on the way up, you're going to lose with the divergent scanner. All right. Even though these are good trades to take, because if you held on to those trades, you'd make so much money on the way down. Yeah, you would make a ton of money on the way down. Now, the problem is with that, if you trade that way where you're adding to that sell on the way up, you could blow up your account. You may not have enough margin. You'll lose your mentality and your discipline. It's not a risk I want you guys to take. So, how do you trade these divergent signals? What I would suggest is that you scale in on the way down. So how would you do that? Let's say you get this signal. Let's do a rewind back to the 16th. Okay. And watch the market here. Let's do a 5x and let's just watch the candlesticks move. Okay. So what I would do is as the market's going up, pause it, pause. There we go. I would place limit or not limit orders, stop orders to sell as the market starts to come down. So I would space these apart. I typically do like a half an average daily range apart when I'm doing this. So a half an average daily range apart, 4 or 5 scale in trades, and then every day you come back, and this market just kept going up, as you guys know. Oh, it kept going up. You just keep replacing these sell stops every half an average daily range apart type of thing, like this. And then every day you keep coming by. If it keep making a top, perfect. Now we're coming down. Now we're scaling into this on the way down. So now we're in all of those positions. All of them are making money. And you had like no drawdown. Like there was zero drawdown, or very little drawdown on the way down when you get into the trade that way. So I'm trying to teach you guys not to add into a loser, even though that has a possibility that it could win. I think you'll have a lot more success if you scale into the trade on the other side of what you're expecting. So if we're expecting a pullback on gold like we did here on April 16th, and obviously it made a top on the 22nd of April. If you're scaling in on the way down, that's going to prevent you from losing a lot of money on the way up. So okay, so that, like I said, not the prettiest. It's not like the prettiest thing. It's not telling you exactly where the top is in the moment that it's topping out. That would have been very hard to be like, oh, you've got to be there right on April 22nd. That's going to be the top. Like, I don't know if anybody knew that. You know what I mean? Like, I don't know how you could ask somebody. I don't even know how I would do that. Like, how would you know that that was going to be the top? So the scanner is going to get you a pretty good idea within like a week or two. It's saying, hey, you're at the top of the USD CAD or the gold, and within the next 1 to 14 days, there's going to be a big collapse or there's going to be a big move to the upside. In this case, it was a collapse with the USD CAD. It was a move to the upside. Okay. So if I had to pick the direction, like if somebody said, hey, which direction should I go for the next 2 or 3 weeks? This is the scanner that I would use to figure that out. Okay. So right now we have a couple of signal opportunities. This is the part you guys have all been waiting for. So how do you make money with this right now? We've got a couple of trades that are just really active as far as COT data goes. Specifically, like for example, you look at this New Zealand yen, it's up 91% as far as the bank shift goes. That's a 2.5% positive change in price, but there's a 91% increase in positions. So that's why we've got such a positive ranking. So the New Zealand yen is likely to continue higher over the next 3 weeks. If you look at it right now, this is what it looks like. It's on an hourly time frame. The New Zealand yen. So if you think about it, out of 28 currency pairs, the New Zealand yen is the most bought up currency pair in the entire Forex world. The banks have bought more New Zealand yen than any other currency pair. Kind of remarkable if you think about it. So, yeah, the expectation is that New Zealand yen is going to be going higher. With that said, though, it can still go down before it goes up, right? You could easily see the New Zealand yen go down a little bit and tap into some liquidity for a week. And then for the next 2 or 3 weeks, just proceed to go on a remarkable rally to the upside. All right. So just be aware of that kind of stuff. Right now, there's a lot of bullish indications. We're obviously in an uptrend right now. You got a nice trend line kind of building out through here. We've also got a top building out right through there. That's an ascending triangle pattern that's usually very, very bullish on the hourly chart. In addition to the fact that the banks have been buying a lot, there's a lot of reasons to believe in this pair over the next several weeks. Okay, if you go out to the even higher time frame on this one, there's a lot of room for this to rally. Also, if you look at this on this 4 hour time frame, you can see that this was a reverse head and shoulders pattern, right? Okay, reverse head and shoulders. And that's a bullish signal as well. This is also considered a cup and handle. This being your cup inside here, this is your handle of the cup. And it's also an ascending triangle, which is very bullish. So, where is NJ going? NJ will likely go minimum to 90 cents, which should put you like right there. Actually, let's go a little higher. That's going to take you to the next liquidity zone on the 4 hour chart. Minimum, that's where it should go. I think it could go even higher, like up to places like this over the next 3 to 4 weeks, something like that. So, how far away are those different targets? Well, from the current price, that's like 200 pips to this one, and it's like 450 pips to this next one. Both of those are very, very possible. Okay. Um, um, oh, nice. Roger says, I kept a journal on these trades for the month of June using a 10K demo account. It increased by 13% in less than 1 month. Holy smokes. That's awesome. Yeah, that's incredible. Absolutely. So, yeah, again, like I was saying, the banks they clearly want to buy this pair right now. Okay, that is their plan. And so for me, when this thing pulls back, if it pulls back, I'm looking for entry prices around liquidity zones because I've got a tool right here that has pretty much told me what the banks are buying. Like I already like what they're buying right now. And we can even see from a technical standpoint, like when you look at the chart, this is very bullish. And these are your two different targets. You got target one, 200 pips away, and target two, that's like 400 pips away, right? Again, when are we going to get there? You're probably looking that could take you a month to get 400 pips. It could also happen in just a couple of weeks, but yeah, some of these do take some time. And it's also very possible it could pull one of those things like the USD CAD where, it just kind of pulls back for like a week and goes the wrong way and then ultimately ends up going higher. So just be aware that that can happen. I've had some people complain about this scanner where they're like, it said strong buy, Steve, and it went down. And it's like, well, for now, like it went down for now. That's kind of what happened with the USD CAD the last 2 weeks is that one went down and then ultimately wound it up much, much higher than where we started. So this one is one of my big focuses right now. So you will see me talking about this one, 2, 3 weeks from now when this one gets up to these different levels that I've shown you right here. I'm going to refer back to this class and I'm going to be like, yeah, remember when we had that? Remember when the NZD, remember when the NZD yen had a 91% plus ranking? Well, there was a reason for that. And now the market's up here. Um, Let me show you a few others that look good. So that's the number one buy signal right now. The number one sell signal is this Aussie Kiwi, or you could do Euro Kiwi. Either one's good. Let's talk about the Aussie Kiwi. Technically, it is slightly higher. The banks have sold this one by the tune of 83%. So they've had an 83% decrease in long positions and a subsequent increase in short positions for a net change of 83%. Meanwhile, the market really hasn't responded to that selling pressure. It's only down 0.37% in the last 3 weeks. That's hardly any pullback in 3 weeks. And so this one also imminently, when I say imminently, like give it a couple of weeks, like 1 to 14 days, you should see that move in that direction. So this one, we're going to expect the opposite. We're going to expect a move to the downside instead. Let's go take a look at it. This is where it is right now. Okay. This one is already kind of in a downtrending market, as you can see. It's already kind of pushing lower. Let's see what else can we kind of navigate from here. This is on a 4 hour chart. Um, yeah, it's I this one nothing impressive about it as far as pushing to the upside. There has been some moves to the upside. There's also been obviously a lot more moves to the downside on this one. But yeah, that should be the expectation is for this one to continue lower over the next, let's say 14 days. So today is the 26th, Thursday, and then 14 days from now would put us, let's see, that's be like right there, the 10th. So yeah, let me actually go down to like a 1 hour time frame. So yeah, by the 10th, I would expect this price to be lower. Some obvious places on the hourly time frame here would be, this area. This would be an obvious take profit zone right in there. It's possible it could go even lower than that. You'd have to go to an even higher time frame. Here's the daily chart. Actually, this is a lot more clear on the daily because on the daily, you actually do have a trend line right through here. And yeah, it does look like it's starting to fall apart. Um, Actually, that's more clear right there. You got all these points of engagement right here, right here, right here, right here. Kind of a break, but then definitely a structure break on the daily chart. So this is probably what caused the banks to sell so much. That's one of the reasons is that structure break right there that happened on April 10th. And so for the last like 2 months, this has been trying to figure out what to do next. And I guess the banks are thinking that this is just getting ready to fall apart. I think that's what they're planning on is for this to come down, maybe even down to here, right? So there could be a lot of room for this to drop. I don't know. That would take a lot longer. That would be like 300 pips away on the Aussie Kiwi. That might be a tough grab, but maybe we could get that, which would be super awesome. Yeah, this one looks very bearish too. So you could trade this one or you could trade that NJ. I think I like the NJ a little bit more than I do this one, but this one is still really, really good. Um, and I would suggest that you pick one or two and then just really run with that. This one's very bullish. You can even see here's the daily chart on NJ. You can see look how bullish this is, guys. This is the daily chart. All right. This corridor is bullish, okay? Like if you've never seen a bullish chart before, this is what it looks like. All right? You got higher highs, higher lows. Look at all the wicks on this too. For the most part, these wicks are on the downside. There's this little one right here that was on the top side, but for the most part, you got this big one right here, this one, the couple down here. Wicks are on the downside, which is good. That suggests that the market's being bought up every time it pulls back. That also means that the market doesn't pull back very often, and when it does, they're very quick to send it right back up. I love this one. I love this one. I'm really excited to trade this one and make some money with you guys. This is probably going to be the one I think I really focused on. I'll probably post a bunch of stuff about this one on the two different Telegram channels and let everybody know right now. I'm sure a lot of people will forget about it in a week, but I'll remind everybody in about 3 weeks from now. Once this has made 300 pips or so, I'll be like, hey, remember that when I said that was going to go up 300 pips? Well, it's been 3 weeks and it's up to here now. So So it does take patience. So it's fun to talk about. Like we're in this like 40-minute webinar, 45-minute webinar where we meet together and we talk about it. And it's a really exciting thing. But waiting that 3 week period to get your payout on something like that's going to make hundreds of pips, that's another challenge. So I would suggest that you get a demo account where you can take a practice trade. Get a demo account tonight, take this trade, throw this into a demo account, throw 3 or 4 or 5 contracts into the trade, let that thing rip, turn it into $5,000 or $10,000 of profit. And yes, it's fake money, but now you can see what I'm talking about, because it's a lot of fun when you can see that thing play out over that, over the course of, 2, 3 or 4 weeks, right? So and then you might start making plans on how to scale this, how to put it into a prop firm account or how to grow your own capital using this very technique. So really excited about this one. This one looks just beautiful in every way. It's already coming up, and I think it's going to go up even higher. Let me look at some of your other questions here. Bill says, "Hi, Steve. I'm back." Oh, nice. Awesome. Good to see you, Bill. Good to see you live. Time to dive back in. Where's a good place to start? May want to set up a meeting in the near future. Thanks for everything. Oh, that's awesome. Super excited to have you back, Bill. Yeah, totally. So, a good place. Obviously, come to these classes. I think that's a great thing to do because you're going to get a lot of information here. I would also suggest, yeah, go ahead and book a call with me on the booking page on the website, and we can talk more in those details there. That's awesome. Jim says, does the scanner relate to Steve's scanner? Yes, it does. So this scanner is separate from Steve's scanner. Steve's scanner is more to pick the direction of the week. The Divergence scanner is to set you on alert on currency pairs that the banks are specifically losing money on. So it's a very different type of thing you're looking at. Although the divergence does relate to Steve's scanner, there is a column right here called divergence, and the divergence signal does play into the overall signal. So that is included in Steve's scanner, but it's only one of 7 different things that we look at on Steve's scanner. Steve's scanner is more of a holistic view of every single currency pair versus the divergence scanner is just 2 variables. You're just looking at the change in price versus the 3 week shift. That's all you're looking at right there. So, yeah, great question. And yep, good job, Mohammed, or a good job, Roger, rather, with the profits that this month. That's great. All right, guys. So that's the game plan. We probably should get a long-term signal into this, like an official price action trade. I may do that with you guys. Um, yeah, we probably should get into this trade, but I'll at least be posting it as far as an analysis goes in the Telegram, both Telegram channels, and let everybody know, hey, time is ticking. You better start thinking about buying NJ because NJ is going to be headed up to here, no doubt. Like I'm not going to be surprised at all if it gets up to like 90 cents right up here. And so minimum you're looking at, like I said, from the current price, that's 200 pips. Like if you make less than 100 pips on this trade, less than 200 pips, to me you cut yourself short. So get your 200 pips or beyond and and there you go. So all right, any questions on the divergent scanner? I'm about to ready I'm probably going to wrap up and call it a night. Um and then we got live trading in the morning for those that want to come to live trading. So all right, guys. Well, I appreciate each one of you. Thank you for coming. Have a fantastic rest of your evening, and we will see you guys in the next webinar. Thanks for coming.